Hello, this is Jordan, and this video is being recorded on the late evening of Tuesday, November 5th, 2019. And in this short video, I'm going to discuss and think about the impact of the stock market breakout on precious metals. So first, let's take a look at how both gold and the gold stocks are performing against the stock market. The first chart there at the top is gold against the S&P 500. The lower one is the ETF GDX, which is the large cap gold stocks plus the royalty stocks, which are also in GDX. Now, the stock market has broken out to a new all-time high, and precious metals remain in this correction, or you can call it a consolidation, but let's call it a correction for now. And looking at precious metals, they've been correcting for 2 months, and they're not threatening any levels close to their summer highs. So it appears that their correction is going to continue at least for a little while longer. And if we're looking at these two charts, we show the 400-day moving averages, and both ratios are going to test their 400-day moving averages soon. Now, in the big picture, if you look at the bottom, I think the GDX to the S&P, that has already bottomed. Now, from a historical perspective, the indexes like the Barron's Gold Mining, the S&P TSX that go back 80, 90 years, they look very similar in that there is a massive historic double bottom as far as the gold stocks to the stock market. The first bottom was there at the end of 2015, and the second bottom was recently in the summer of, not recently, but over a year ago in the summer of 2018. So the GDX, or gold stocks, relative to the S&P, from a bird's eye view, they are coming off a massive historical double bottom. But with that being said, if you look at that chart, at least the short-term outlook, and it's the same for gold against the S&P, it's sideways to lower. The stock market is outperforming precious metals. Like I said, that should continue for at least a little while longer. Who knows how long that'll last, but that's the way it is right now. But the takeaway is you can see that the lower ratio, that did not make a new low in the last year or two, whereas gold to the S&P, that did make a new low. In other words, GDX to the stock market has a massive double bottom, 2015 and 2018, whereas gold against the S&P, its recent low, the 2018 low, that's well below the 2015 low. So the gold stocks are, from a big picture view, they look to be stronger than gold. And I expect that to continue because of the position of the stock market, which is bullish and upside momentum right now because of the breakout. Now, as far as, how can precious metals perform with the stock market being so strong? Because I'm often one to talk about how we need precious metals to outperform the stock market. We need the stock market to roll over, etc. We get more rate cuts. That's bullish for gold. But we can also check back in the 1960s, because that's really the only period in history where gold stocks performed very well alongside the stock market. And look, the difference then compared to the 2000s and the 70s is those periods of strong performance. Those periods really began with the stock market, they began with precious metals strongly outperforming the stock market, and the stock market, having a huge inflationary issue or a recession, etc. But the 1960s, that was a period where the price of gold was fixed. So there was a period where gold stocks and the S&P really went up together. And here in this chart, we have the gold stocks in the middle in blue. We have the S&P at the bottom. We have the gold stocks against the S&P. That's the Barron's Gold Mining against the S&P at the top. So we're looking here from about 1956 through 1968. And so there was an epic bottom in gold stocks in 1957. And, they performed pretty well. Their second move higher really began in 1960. That went through 1961, and then the gold stocks consolidated for almost 2 years. But one thing to note is look at the top in that ratio. The gold stocks, as far as their relative performance, that strong move really started in 1964, and then it broke the resistance of that ratio in early 1965. And if we go back and you look there at the middle, the blue arrow on the gold stocks at the end of 1963. Now, from that point, over the next 2.5 years or so, they went up 175%. Now, from that point, again, the end of 1963 up to the very beginning of 1968, so call it 4 years, they went up 385%. And we can see during those periods, that's when gold stocks were strongly outperforming the stock market. And look, gold stocks were doing well in the early 1960s, and the S&P was doing really well then. It was doing better than gold stocks. But even when the ratio started to have this huge move higher, and that move started in 1964, but even at that point, the S&P still performed fairly well. I mean, it kept rising. It made a higher high in early 66. Then it corrected. It went to new highs after that. So there's a lot to take in here, but I'll really get to my conclusions here. And, from this little study, these are my conclusions. Now, first of all, the breakout in the stock market that we see here and now, that's going to contain precious metals for the time being. Now, even without that breakout, if you look at the charts of precious metals, gold and gold stocks, they look like they're going to continue to correct and consolidate, at best, maybe be range bound, go sideways for a little while. So the stock market breakout is not helping that, but I don't think it's hurting it tremendously, at least not yet. Now, secondly, in this kind of environment, when you have a strong stock market, the gold stocks and silver are going to perform better than gold. So when the stock market is strong, generally that's better for the gold stocks than gold. I mean, just relatively speaking, if you had to own gold stocks or gold and the stock market's doing really well, you'd want to own gold stocks. If you're in a recessionary or contractionary environment, that's where gold is probably going to do better than gold stocks. Now, finally, precious metals outperformance against the stock market. That is what is going to really unleash the huge upside in the sector. And, the next big upside move I'm most looking forward to is the huge breakout in GDX, above that 31, 32 resistance, that 6-7 year resistance. GDXJ is a little bit behind GDX, but it has been outperforming recently. Off the top of my head, I think that level for GDXJ is around 50. So it's certainly, and I just conclude by saying it's certainly possible that based on the history that we're studying, we could see the gold stocks, bottom at some point in the months ahead and, rally up to those resistance levels, even if the stock market is still strong. However, we really need to see GDX and GDXJ strongly outperforming the stock market for that huge breakout to take hold. And so that's how I would put it. With that all said, I hope you enjoyed this video. You can follow all my work at thedailygold.com. You can opt in there at the top, get my free book. Consider subscribing to my premium newsletter. We focus on market timing and stock selection in the juniors. And this correction consolidation is probably going to continue for at least a few more months, probably a little bit longer. So coming up over the next couple months, there's potentially some great buying opportunities here. you want to get in at a timely point, and you want to get in before the market looks like it's going to take out those 6-7 year resistance levels, and be positioned for that massive move higher in GDX and GDXJ. You want to be positioned in the juniors that will outperform and do multiples of the performance that GDX and GDXJ will do. Okay, so thanks so much for listening to this video and watching this video. And I look forward to publishing another video update for you guys in the days ahead. Thank you.